Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GENEDX Holdings CORP quarterly report. GENEDX Holdings Corp offers a range of businesses and services, including genetic testing services, pediatric and rare disease diagnostics, whole exome and genome sequencing data and information services, AI-based platform for NGS analysis, interpretation, and clinical reporting, rare disease testing, hereditary risk testing, cancer testing. GENEDX Holdings Corp. (WGS) has experienced a significant surge in its stock price over the past year, with a remarkable increase exceeding 63.62%. Several key factors have contributed to this substantial growth. The company's exceptional Q2 2025 financial performance was a major catalyst for the stock price rise. GENEDX significantly outperformed earnings and revenue expectations, reporting $0.50 in earnings per share and $102.7 million in revenue, exceeding forecasts by 316.67% and 20.19%, respectively. Positive analyst sentiment and upgrades also played a crucial role in driving up the stock price. Piper Sandler maintained an overweight rating and increased its revenue projections, while BTIG raised its price target from $100 to $125, upholding a buy rating. The achievement of a 52-week high on August 22, 2025, further underscores strong investor confidence in the company's upward market trajectory. The primary drivers of revenue growth in the company are primarily driven by diagnostic test revenue, which saw a significant increase of 47% in 2025 and 65% in whole exome and genome sequencing revenues. Additionally, other revenue streams such as entry into service agreements, collaborations, and partnerships contributed to the growth. The acquisition of Fabric Genomics also played a crucial role, generating $1.7 million in revenue. On the other hand, potential risks that could lead to revenue decline include failure to increase market penetration, inability to obtain contracted reimbursement coverage from third-party payers, and decreased reimbursement rates for tests performed. These factors highlight the importance of maintaining market share and securing adequate reimbursement for diagnostic services. Net income and profit margins show significant improvement. The company's net income has undergone a significant transformation. In Q3 2025, the net loss decreased from $0.9 million to a modest gain of $14,735, marking a substantial improvement over the same period in 2024. Furthermore, for the year-to-date, YTD 2025, the company's net loss has turned into a profit, indicating a notable shift in its financial performance. Profit margins have also seen a significant increase. The gross margin rose from 62.2% to 72.4% in Q3 2025, and from 61.1% to 69.8% YTD 2025, compared to the same periods in 2024. Additionally, the adjusted gross margin increased from 64.4% to 73.8% in Q3 2025, and from 62.8% to 71.2% YTD 2025. The primary reasons for these improvements are attributed to changes in fair market value of financial liabilities and improved gross margin profitability in 2025 compared to 2024. These factors have collectively contributed to the company's enhanced financial performance, resulting in a significant reduction in net loss and an increase in profit margins. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. In 2024, the company experienced a negative operating cash flow of $25,313. However, by 2025, this figure had reversed, resulting in a positive net cash provided by operating activities of $36,369. This marked shift suggests that the company's operational efficiency and management have improved, enabling it to generate sufficient cash from its core business activities. The company's financial situation has undergone some changes over the past year. While the long-term debt has increased by $21,334, the overall debt level has risen from $142.2 million to $156.1 million. However, a closer look at interest expenses reveals a significant decrease of 13% and 33% across various periods. This suggests that despite an increase in debt, the company's interest expenses have actually decreased, indicating potential cost savings or more favorable financing terms. platforms. Management is optimistic about the company's outlook, citing several key strategies to drive growth. The company will focus on increasing billable tests and revenue by expanding coverage and reimbursement from third-party payers. To achieve this, management plans to invest in platform innovation and adapt to changing technologies and competitive pressures. Additionally, the company aims to increase adoption of services among existing and new customers through targeted investments in product development and commercial teams. This will enable the company to shift its test mix towards more profitable whole exome and genome tests. While there are potential risks, such as the FDA's regulation of LDTs, management believes that breakthrough device designation from the FDA could accelerate review and authorization. The company also has sufficient liquidity for at least 12 months and may seek additional funding through various means to support its growth strategy. That concludes the financial summary for GENEDX Holdings CORP. Feel free to comment below, and I will be happy to answer them when possible.